Hi, I'm Dave Gentry. Welcome to another episode of Small Stocks, Big Money. And for those of you new to the show, RedChip is an investor relations, media, and research firm focused on emerging growth companies. Our unique platform combines global multimedia with traditional investor relations, reaching investors around the world. Today's show features interviews with executives of two public companies. First up today is Spectaire Holdings, stock symbol SPEC on the NASDAQ. This company is revolutionizing how we monitor carbon emissions with a miniaturized technology that's more affordable than current technologies used by the trucking industry, used by oil and gas companies. We'll learn more when we speak with the CEO later in the show. Up next is Green Power Motor Company. This company is making electric trucks, electric buses that are affordable, durable, and very easy to deploy. This company has tremendous growth potential. And later in the show, we'll speak with the CEO. Now, before we get to the first interview, our quote of the week, and it comes from my book, Small Stocks, Big Money. And the quote is from Michael Corbett, who runs the Parrot Microcap Fund. The most important lesson I've learned working in the microcap space is that winners are winners and losers are losers. Stick with the ones that are working and don't make the mistake of exiting too early. Featured in chapter 2 of my book, Small Stocks, Big Money, a book of interviews with some of the biggest players in the microcap space. Now, let's get started with our first interview today with Spectaire Holdings. Brian, thanks for being with us today.
Thanks for inviting me.
It's my pleasure. I want to start with your giving us an overview of Spectaire Holdings. You have a technology that was developed out of MIT that measures emissions, if you will. Talk to us about this company and this technology.
So I discovered these patents that were at MIT that were basically a miniaturization of a science called mass spectrometry. And mass spectrometers are used to detect cancer, to create pharmaceutical drugs. They're used in a broad sphere of applications. But these instruments are large laboratory devices that are extremely expensive in the $150,000 to $250,000 range. And I discovered these patents that had miniaturized this discipline to a device that can fit in the palm of your hand, can be put anywhere, and it costs us $2,000 to make these units. And so with this technology, we can now solve problems in the world where you can't take a laboratory device and, in our case, stick it on a truck. But with a device that's as small as we have, as inexpensive it is, we can attach these devices to many applications, our first being the diesel engine market. And there's two subsets there, which is long-haul diesel trucks to measure their emissions, or oil and drilling rigs, which have large, big Caterpillar engines on it. And so what we do is we take this device, attach it near the engine, and we accurately measure the emissions of what's going on in the device.
And so there's about over 7 million trucks on the road today,
right,
that could qualify for this technology.
Our market is in Europe and in North America. There are 11 million long-haul diesel trucks that travel about 100,000 miles a year. That's our target market, and so which gives us a market size. We charge $1,000 per year of recurring revenue. So that would be 11 million times 1,000 is $11 billion recurring revenue market.
So between Europe and the U.S., there's about over 11 million long-haul trucks. What's the value proposition for these trucking companies?
These 11 million trucks are modern trucks that are very, very friendly to the environment. They have really good emissions mitigation technology on them. And they travel about 100,000 miles per year. That's our target market. And if you can attach a mass spectrometer and actually measure the emissions, we see an improvement in the emissions profile of approximately 62% on these trucks is what we've been measuring. And the trucking company monetizes that in several ways. One is they become a much more competitive company because it's now mandated that you record emissions. But ultimately, sort of the icing on the cake is you can monetize this through the creation of carbon credits. So a modern truck that measures their emissions accurately can create about 200 carbon credits per truck per year. And the value of these carbon credits range between $50 and $100 now. So it's a very, very large carbon credit market apart from the core value proposition, which is a trucking company who has a low emissions profile will be much more competitive in winning business from their customers.
Earlier, we looked at your business model. I think at 10,000 units, your EBITDA is about 19 million, roughly, on about 50 million in revenue. Is that accurate? Is that correct?
That's about right. So for every 10,000 units that we put into the market, our bottom line is in EBITDA is $19 million.
Okay. And what's your manufacturing capacity? I know it's third-party manufacturing in the U.S., which is great. What's your capacity today, and where do you hope to be a year from now?
By August, we will be able to produce 500 units per month. By January, we'll ramp that up to 1,000 units per month. And then we need to find another manufacturing partner beyond that.
So let's go back to the business model. You have three sources of revenue. You have the initial purchase of the equipment. You have a maintenance agreement. And then you have these recurring monthly fees. So you talked in our conversation earlier, you said this could be $1 billion company. How do you get to $1 billion in revenue?
Well, if you have 11 million, the low-hanging fruit in our business is 11 million long-haul diesel trucks that are modern. If you multiply that by $1,000 per year of recurring revenue, that's 11 billion in revenue.
11 billion, right.
11 billion. That's
so if you
just
get 10% of them, you're $1 billion company.
That's the easiest way to get to $1 billion. But what we have not factored into is the carbon credit market, which really dwarfs those numbers. So in the trucking industry, those 11 million trucks will produce 200 carbon credits per year, and each one of those carbon credits is valued between $50 and $100. So if you multiply 11 million times 200 times $50 a carbon credit, you get a very big carbon credit market. Many billions.
Extraordinary, extraordinary.
And we receive half that revenue. So in our business model, we get half and we share half with the trucking company or the oil rig producer.
Okay. So you went public through a SPAC back in October, I believe, correct?
That's right.
Okay. And on your board, you have the actual inventor of this technology. So I want to talk about the competition and how this technology is better and different.
So there is no device that is a mass spectrometer that can measure gas at the molecular level. There are sensors out there that can't get to the level of accuracy that you need in order to generate the CO2e profile, which is the profile that the world regulators, emissions regulators need. So there's 6 gases that you need to measure at the molecular level. So what the world does right now is it approximates CO2e or CO2 by the amount of fuel that's consumed. So there's a direct relationship between fuel consumption and CO2 generation. And that's flawed. So our competition is a flawed formula because although on the surface, it seems to make sense that CO2 would be a derivative of fuel consumption, but that formula does not take into account the emissions mitigation technology that is used to reduce emissions. So on trucks, there's very significant technology that if used properly can reduce those emissions, which increases fuel consumption but reduces emissions. And on rigs, same thing. You're introducing a technology into a rig to reduce emissions, but that perhaps could cost some fuel. So you can't, the world is linking fuel consumption with emissions production, and it's not correct. You must measure.
Okay. Aren't there other issues though? Your unit sells for 2,000. Theirs sell for 50,000. They're heavier, harder to deploy.
Well, okay, so if you're looking at another device that could do this, there's a company called Hariba that makes a device, $100,000. It's 140 pounds and cannot be attached to a device, and certainly not like ours can, which is the size of a toaster.
So you have major competitive advantages, obviously a multi-billion-dollar market just in two verticals, the trucking industry and the oil rigs. What would you say is the essential value proposition for your company right now? Why should they own the stock today?
Emissions is driving global government policy. There isn't a bigger issue than that. There are billions and billions of dollars being spent on emissions mitigation technology, and no one really knows the effectiveness of these technologies. If you look at all the ways that you can play in this marketplace, we're the only one that is actually bringing a measurement device. Everyone else that you'll talk to in this space will say that their technology improves emissions, but the myriad of those technologies, we're the only one that is a measuring device that basically tells you how effective all those other technologies are.
I would add to it, we, again, discussing your business model earlier today, with $30 million, you say you can generate about $1 billion in revenue, and that's largely because of those carbon credits that you can sell.
That's right.
No, that's right. We do not need a lot of capital in order to become a cash flow positive company, because the amount of money that we make per unit, it pays for the unit, or what we sell it for pays for the unit, and the upside revenue is very, very high gross profit margin. So once we start producing 500, 600, 700 units a month, we'll be a cash flow positive company.
Excellent. So the stock at a roughly $20 million market cap today, you're in the beginning stages of commercialization. You've actually manufactured 70 of these units, 12 are now deployed. So you're proving that it works. You've got a major contract with Neighbors, a major company, very, very large company. So you're extremely well positioned. And so I would tell investors today that at this current market cap, it looks very undervalued to me. Thank you so much for being with us.
Thank you.
Now, to get more information on Spectaire Holdings, visit spectaireinfo.com. You'll see research profiles, investor presentations, CEO presentations, video content, all free. And you can subscribe to email alerts as well to stay on top of the news for this company. And you can also call us at 1-800-RedChip to speak to a specialist if you have any questions. And also subscribe to our free weekly newsletter at redchip.com. And you'll get information on hundreds of companies like Spectaire Holdings in multiple sectors. Again, visit redchip.com, look at our stocks page. It is the biggest small cap stock portal in the industry. Every company listed on the NASDAQ or New York Stock Exchange with market caps of $2 billion and under, and it's categorized by industries. And also, again, make sure that you join our webinar series. You can find that, again, on our website under the Events tab. In addition, you can sign up for our newsletter, or you could also order a copy of my book, Small Stocks, Big Money. Now let's move on to our next interview today with Green Power Motor.
Hi, today we have Fraser Atkinson, CEO of Green Power Motor, trading on the NASDAQ under the ticker symbol GP. Fraser, great to have you with us.
Great to be here.
Fraser, Green Power Motor is advancing the adoption of electric vehicles by making all-electric buses and trucks that are affordable, durable, and easy to deploy. Let's start with a brief overview of your business.
So Green Power designs, manufactures, and distributes a suite of products in the medium and heavy-duty all-electric space. So we're not in the commercial space. We're in the medium and heavy duty. And an illustration of that is that we've designed our own cabin chassis that we build a number of products on, both on the passenger side and the cargo commercial side. And we also sell it to other third parties, including other OEM EVs.
Now, considering the rapidly evolving EV landscape, can you shed light on the current and future addressable market for Green Power's product?
So we've focused into two core areas: the school bus market, which has really been one of the few areas that has substantial tailwinds, not headwinds, as an EV company, and has huge support, a lot of advocacy and money and mandates. So we're focused on that area. And the other area we're focused on is in commercial vehicles. In terms of the competitive landscape, over the past year or two, many of our competitors have either gone by the wayside or been acquired or consolidated with other operations and changed their businesses such that, you know, we're really now faced with a less of a sales and more of a production focus for our company.
Fraser, for the 9 months ended December 31st, 2023, Green Power reported record revenue. You showed an impressive 40% increase over the previous year period. What is driving the remarkable growth?
Well, I'd also add that within that, both that year and the previous year, we also generated a gross profit, which very few, if any, of our EV competitors are doing on a consistent basis. Some are doing it once a quarter, but not consistently. What's helping us or driving us is that where we're focused. We're not trying to do all business for all people. Within the school bus and the commercial vehicles, we're being very strategic. And what I mean by that is states like New York came out with a mandate a year ago where they said, with less than 10 years from now, we want all of our school buses to be battery electric or zero emission. And so that means that starting in the next year or two, the school districts and operators in New York have to buy battery electric vehicles. And there's 50,000 in the state out of 480,000 in the nation. Then you go on the other coast, the West Coast, and in California, they followed in this past couple months, setting a similar mandate for the state of California. And they're also bringing to the table hundreds of millions of dollars a year to help electrify. And more recently, the federal government has had their school bus program, and they just did their latest award in January, and we've applied to their next round and expect to continue to enjoy the benefits of the federal government supporting electrification with money for that.
Fraser, with the school bus division being a key growth driver, could you discuss how you envision Green Power transforming school transportation?
First, it starts with our products, which are truly a modern representation of what a school bus ought to be. You know, in terms of our builds, we use an aluminum lightweight frame, super strong, super light, gives the vehicle is that much easier to operate. And we have both the Type A smaller school bus and the Type D larger school bus, which really addresses substantially all of the needs of any particular school district. So we have the products, and we focused on the areas where the greatest needs. The states that are looking at electrifying now, we're not trying to sell a particular state that's a naysayer. We're quite happy to deal with them at a later date, in that we have more than enough business with some core states that are really keen to electrify because they've set mandates to do so.
Now, behind every successful company is a dynamic leadership team, Fraser. Can you talk about the strengths and experiences of Green Power's management team and how they have been pivotal in helping the company achieve its goals?
Well, I will apologize to our team in advance for those that I don't name, but we have Brendan Riley as our president. He was, as I understand it, employee #1 for BYD in North America. So he has a greater experience in the EV space than even I do, having been in this space for over a decade. We have Michael Seifert, our CFO, comes from a background in the logistics and shipping area, so really understands a lot of the issues that we have to deal with in terms of production flow. We have our production manager. He built thousands and thousands of school buses for Bluebird down in Georgia. And also between that point in time to now, had some experience with other EV companies, so has incredible subject matter expertise. We have great people in our supply chain, in our commercial vehicle sales group, and our school bus sales group. So it's, we really are blessed with a great team here.
Now, Fraser, what is the essential value proposition of green power? Why should investors take an interest in green power right now?
Well, it's our products that we brought to market. So we're not reliant on somebody else that's going to deliver a product that may or may not satisfy, what we intended to build. All of our products were built from day one to be battery electric. Number two, we have, as you were asking earlier, we have a great team, and that's essential in terms of a sector that changes almost, not just every quarter, but every month and sometimes every week. So we have to be able to adapt, and you need a team that is quite willing to do so. And I'd say the third thing is that our, for example, our focus in the school bus area is in an area where we're delivering products that have a significant health benefit. We didn't talk about this earlier, but the school bus area, we're replacing diesel emitting school buses, and the research shows that the NOx emissions from those have as high as 15 times greater probability or possibility of getting lung cancer and respiratory illnesses. So, we feel really good every time we deliver a school bus.
That's a great way to end this interview, Fraser. A really inspiring thought, replacing diesel with electric for kids. I love it. Thank you for sharing your great story with us today.
And once again, thanks for having us.
Now, to get more information on Green Power Motor, visit greenpowermotorinfo.com. You'll find research profiles, presentations, video content, webinars. It's all free. And subscribe to the email alerts so you can stay on top of the latest news for Green Power Motor. You can also call us at 1-800-RedChip to speak to a specialist if you have any questions. And also, go to our stocks page. This is a page with over 2,000 stocks divided by industry. Every company that is listed on the New York or the NASDAQ with market caps of $2 billion and under, you'll find a wealth of information. Now let's recap the companies featured today. First, you met Spectaire Holdings, stock symbol SPEC, on the NASDAQ. This is a company that's revolutionizing the monitoring of carbon emissions with a miniaturized platform, a technology they call AirCore that is patented. They are seeing major industry players beginning to use this technology. Then you met Green Power Motor Company, stock symbol GP on the NASDAQ. This company is making electric trucks and buses that are affordable, very easy to deploy, and very durable. Very excited about Green Power Motor. Take a look at this company. You can visit greenpowermotorinfo.com to learn more. Again, if you have any questions about any of the public companies featured on today's show, call us at 1-800-RED-CHIP or email us at info@redchip.com. And also, again, make sure that you join our webinar series. You can find that, again, on our website under the Events tab. Closing, remember, while small caps can provide significant gains, you must be prepared for the downside. Small cap stocks are among the most volatile asset class. Some of the companies featured on the show, and most of them are RedChip client companies, and we may own stock in these companies. So please always read our disclosures at redchip.com. Visit our stocks page. You'll find a portal of over 2,000 small cap stocks with market caps of $2 billion and under. This is the best portal in the small cap space. Again, redchip.com. Again, thanks for being with us today.
Hello, I'm Bob DeLorean. I am the chairman and CEO of Excel Brands. Excel is an industry leader in live stream shopping over linear television. This year, we passed over 4 billion in sales on QVC, HSN, and other networks like them around the world. We have over 20,000 hours of programming time and have an outstanding team of managers that have all worked together over the last 30 years in prior companies and 13 years in Excel Brands. We believe that our company is positioned for very strong growth over the next 3 to 5 years, given recent licensing agreements that we've entered into with our brands and expense cuts that we've made to our P&L, and are in the process of launching a new live stream platform that will turn the everyday shopper into a paid social media influencer. We believe this is going to revolutionize shopping over the internet. It will become a very significant part of all e-commerce platforms, and it will enable every shopper to become a paid influencer. People will simply think differently about sharing information about brands and retailers over the internet and social media platforms when they become a member of our new Orme platform. To learn more about us, visit us on our website at excelbrands.com.